WatchGuard Capital. Invest your time wisely. I'm Stephen with WatchGuard Capital, and this is Estate Tax Part 4, How to Avoid Estate Taxes, where I review all the deductions, exemptions, and credits taken in 2016 to teach you how to avoid estate taxes, which turns out to be incredibly easy, and eventually help this group solve the national debt problem, which turns out to be super complex given competing political agendas. If you missed parts 1 through 3, here's a recap. Only 13,429 Americans out of 2.7 million who died in 2016 had to file estate taxes because the amount that you can transfer tax-free went up under the last 3 presidents. Those 13,429 deceased individuals had $197 billion in assets upon death. And if you want to be wealthy too, stocks, real estate, and retirement assets were the most important categories to get you there. Which brings us to deductions, which are basically shields that protect dollars of income or assets from the IRS taking a cut for Uncle Sam to pay his bills. In 2016, 13,322 Americans took $99 billion in allowable estate tax deductions, meaning half of all assets were protected from any estate taxes because of deductions, and we haven't even gotten to exclusions or credits yet. To put it another way, most people took the standard income tax deduction in 2016, which blocked $6,300 of income from income tax when trying to figure out how much tax they owed for the year. If this flag represents one standard income tax deduction in 2016 at $6,300, the average estate tax return filed in 2016 took 1,151 standard deduction equivalents and shielded $7.2 million of assets from taxes. Shielding $7.2 million in assets from the top tax rate of 40% means that these deductions save the average estate tax filer $2.9 million in taxes, so it pays to pay attention right now. Smaller estates saved about $900,000 in taxes by claiming $2.3 million in deductions, or 371 2016 standard deduction equivalents. Larger estates saved $37.5 million in taxes by claiming 14,881 2016 standard deduction equivalents, worth $93.7 million in total. Average income deduction, average estate deduction. For the rest of this analysis, the 2016 standard deduction is assumed to be $6,300 because it was, and will be referred to as a standard deduction. The estate deduction equivalents will be assumed to be a multiple of that amount in the 40% tax bracket because the average estate had $14,693,544 in assets, and the top estate or gift tax bracket of 40% before deductions, exclusions, and credits starts at $1 million, which is much lower than $14.6 million. If you don't completely understand what I said, that's okay, because it's more of a disclaimer for somebody who's going to try and invalidate my work. The first deduction is funeral expenses, which are expenses related to funeral and burial of a decedent. That's easy enough. Funeral expenses only accounted for 0.2% of all deductions taken, which is honestly a rounding error since all the other deductions that were taken in 2016 accounted for 99.8% of total deductions taken. But let's review it anyway. Average funeral expenses are $17,500, or approximately 3 standard deductions. Because this is a deduction, the average estate tax filer saves $7,000 in taxes. If you opted for a basic funeral package, you spent about $14,000 on your funeral, or about 2 years of standard deductions, which saved you $5,600 in possible estate taxes. If you opted for the deluxe package instead, you spent $59,100, or 9 years of standard deductions on your funeral expenses, which saved you $23,600 in possible estate taxes. If you were the average American filing your income tax return that year, you didn't have to pay income taxes on $6,300. But again, funeral expenses only accounted for 0.2% of the total deductions, and $14,000 to $59,000 is relatively a tight range when discussing millions and billions. Now, expenditures on executor commissions were 0.57% of total deductions, or more than double funeral expenses, but still a very small amount in the grand scheme of things. An executor is the individual or institution nominated in a will and appointed by a court to administer estate property, pay the debts left by the deceased, and to distribute estate property as the deceased directed. If you paid an executor the average amount, you paid him or her $196,667, or 31 years of standard deductions, which saved you $78,700 in possible estate taxes. If you were on the low end, you paid your executor $94,200, or 15 years of standard deductions, and saved $37,700 in possible estate taxes. If you were on the high end, you paid your executor $1.24 million, or 197 years of standard deductions, which saved you $496,000 in taxes. Asking other Americans to pick up $496,000 of your tab for your executor over an estate because it's large is brazen, given that the average American filing an income tax return got a standard deduction of $6,300 that year. But one could easily prepay the executor expenses before death, and thus the assets wouldn't be in the estate for tax consideration, so I guess this kind of makes sense. If you didn't pay an executor and opted for an attorney to oversee the transfer of your estate instead, your attorney's bill was part of the attorney's fees deductions, which accounted for 0.6% of the total deductions, which includes fees that have been paid for attorneys to work on behalf of the estate or amounts that can be reasonably be expected to be paid in the future. The average amount that you would have paid your attorney is $77,000 or 12 years of standard deductions. Because this is a deduction, you save $30,800 in possible estate taxes. If you were on the low end, you paid your attorney $42,400 or 7 years of standard deductions, and you saved $17,000 in possible estate taxes. If you were on the high end, you paid an attorney $397,600 or 63 years of standard deductions, and saved $159,000 in possible estate taxes. If you were an average American filing your income tax return, you didn't have to pay income taxes on $6,300. Other expenses and losses are administrative expenses incurred in preserving and administrating the estate, and include appraisers' fees, certain court costs, and the cost of storing or maintaining assets of the estate. These allowable deductions were 0.76% of the total estate deductions taken, or about 4 times more than funeral expenses, but again, still small at less than 1%. If you were average, you paid $98,300 on other expenses, or 16 years of standard deductions, which saved you $39,300 in possible estate taxes. If you were on the low end, you paid $43,200 or 7 years of standard deductions on other expenses and saved $17,200 in taxes. If you were on the high end, you paid $556,500 or 88 years of standard deductions on other expenses, which saved you $222,600 in possible estate taxes. If you were the average American filing your income tax return, you didn't have to pay taxes on $6,300. These 4 estate deductions only accounted for 2.1% of the total deductions taken, so we still need to cover deductions that accounted for the other 97.9% of total deductions, so the party is really just getting started. Debts and mortgages were 9.0% of total deductions, and I totally understand this deduction. If you inherited $1 million property with $1 million mortgage, in essence you inherited zero net worth, and it would not make sense to pay 40% taxes on $1 million or $400,000 in taxes on an asset without considering the attached liabilities. Thus, it makes total sense for mortgages, liens, and other debts to be claimed as a deduction against the value of an estate. If you were average, you claimed $936,000 of other mortgages and debts against your $14.7 million estate, or 148 years of standard deduction equivalents. On the low end, you would have taken 49 standard deduction equivalents. On the high end, you would have taken 1,739 standard deduction equivalents. That all makes total sense. Now for the behemoth in the room. Bequest to surviving spouse deductions, which accounted for 67.6% of total estate deductions, or about 2/3 of all deductions taken. If you own $42.6 million in joint assets with your spouse and then you kick the proverbial bucket, only half, or $21.3 million in assets, would have to go through the estate process. Under unlimited marital deductions, you can transfer your $21.3 million back to your spouse with no taxes due. Your spouse can then remarry and transfer your $21.3 million and his or her $21.3 million to your new replacement, and still no taxes would be due. If you made your spouse sign a prenup or kept your assets that you acquired before getting married separate on purpose, then all of your assets would have to be included in your estate because you elected not to hold them jointly. But you can still transfer all your separate property to your spouse upon death with no taxes due. If you claim the average bequest to spouse surviving deduction, you transferred $9.8 million to your spouse, or 1,557 standard deduction equivalents, and saved $3.9 million in possible estate taxes. If you claimed on the low end, you transferred $3.5 million to your spouse from your assets, or 562 standard deduction equivalents, and saved $1.4 million in possible estate taxes. If you claimed on the high end, you transferred $96.1 million to your spouse, or 15,257 equivalent standard deductions, which saved you $38.4 million in possible estate taxes. If you were the average American filing your income tax return in 2016, you didn't have to pay tax on $6,300. In the future, I'll be doing a deep dive into the history of charitable deductions in our tax code, as we may need to revisit the practice of allowing tax dollars that could be used to cap or reduce national debt to be diverted to fulfill gifting wishes, but for now let's review charitable deduction amounts. If you claim the average deduction for charitable deductions, you claimed 1,046 equivalent standard deductions because you donated $6.6 million to charities. $4 million was out of your pocket, and $2.6 million was out of your potential tax bill. If you claim charitable deductions on the low end, you claimed 251 equivalent standard deductions, or $1.6 million. $1 million was out of your pocket, and $600,000 was out of your potential estate tax bill. If you claim charitable deductions on the high end, you claim 9,531 standard deduction equivalents, or $60 million. $36 million out of your pocket, and $24 million was out of your potential estate tax bill. Thus, the 3,044 people who claimed $20 billion in charitable deductions in 2016 on their estate tax returns donated about $12 billion out of pocket and about $8 billion from their potential estate tax bills. If you were the average American filing your income tax return that year, you didn't have to pay taxes on $6,300. The last deduction claimed by 2,591 deceased Americans in 2016 was the state death tax deduction, which is a super scary deduction name, but it allows you to deduct estate, inheritance, legacy, and succession taxes paid to states when computing your federal estate tax bill. Only 12 states in the District of Columbia impose estate taxes, and only 6 states impose inheritance taxes in 2020. So if you lived in the other 32 states, this deduction is not applicable because you don't pay death taxes. If you lived in one of the 18 states with a death tax and claimed the average deduction, you paid $959,000 to your state, or 152 standard deduction equivalents. So $575,000 was out of your pocket and $383,000 was out of your potential federal estate tax bill. If you claim state death taxes on the low end, you claim 65 standard deduction equivalents, or $410,000. $246,000 was out of your pocket and $164,000 was out of your potential federal estate tax bill. If you claim state death taxes on the high end, you claim 965 standard deduction equivalents, or $6 million. $3.6 million was out of your pocket and $2.4 million was out of your potential tax bill. Asking the citizens of the other 32 states with no death tax to subsidize you and your state's decision to have a death tax seems brazen, because you could just move if you wanted to avoid this tax. And if you were the average American in one of those no death tax states filing your income tax return, you didn't have to pay taxes on $6,300. All right, so quick recap. 13,429 Americans died with $197 billion in assets, or about 3.2 million years of income at $60,000 per year. They claimed 15.7 million standard deduction equivalents, which blocked about half of the assets from taxes. So potentially taxable assets are now down to $98 billion. And if you're checking my math, just know that you have to account for the 6-month alternative estate evaluation allowance, and that the state death tax deduction is not included in the total allowable estate deductions figure by the IRS for some reason, and I really don't know why. But moving on. So far we've reviewed deductions only. Now it's time to review tax credits, which are a one-for-one reduction in the tax dollars due. First, some accounting actions. In 2016, you could gift somebody $14,000, or a married couple $28,000, tax-free. And if you were married, you could double these amounts with the help of your spouse, without having to worry about gift taxes. In 2020, those amounts are slightly higher. But if you gave over the annual gift tax amount any time in the past, you were supposed to file a form with the IRS letting them know that you did and add that amount here when you figure out your estate tax liability. So in this case, 6,825 people gave $20 billion over the annual gift tax-free amounts during their lives, which increased the potentially taxable amount to $118 billion. At a top tax rate of 40%, I would expect the estate tax bill on $118 billion to be about $47 billion, which is approximately what the IRS was expecting in tentative taxes. Their number was $46.6 billion. If we use the $197 billion in assets before taking deductions and add in taxable gifts, the tentative tax rate is 21.4%, which is close to the federal tax rate on a single person paying federal income and payroll taxes on the $15,576 of income in 2016. The first credit to review is for gift taxes paid, which makes total sense. 1,496 of the 6,825 Americans who made taxable gifts paid previous gift taxes, which doesn't actually make that much sense. And it's an astonishing low number of the 13,429 total estates in 2016. It either means that 11,933 deceased Americans never gifted above the annual tax-free amount, gifted above that amount but never told the IRS to defraud Uncle Sam, or did gift above the annual tax-free amount and deferred paying taxes until the year of his or her death, in this case 2016. That last option is probably a bad idea, because if the government deferred tax collections in any particular year, it would have had to increase the debt it borrowed that year to pay bills and interest payments every year afterwards until the tax was finally collected, in this case 2016. It is possible that the interest paid by the government to defer collecting the original gift taxes ended up being more than the original amount of tax that would have been due, and that's not good business. Another point to make, since there was approximately $20 billion in taxable gifts made and $1.9 billion in gift taxes paid, the effective tax rate is 9.46%, or about 0.5% less than what a person pays in income taxes on the first dollar of income taxed after the $6,300 deduction in 2016. But that gift tax credit lowers the total expected estate tax bill to $44,694,308,000, owed by 12,739 deceased Americans. The next credit helped 113 Americans avoid $82,104,000 in taxes, or $726,584 on average each. Other tax credits are taxes paid to foreign countries because of their estate tax laws, and credits for taxes paid on previous estate planning type transfers. An $82 million credit is equal to $205 million in deductions in the 40% tax bracket, which is equal to 32,581 standard deductions at $6,300. If this is the average American taking the average standard deduction, this is 113 individuals taking 32,581 standard deduction equivalents for the other tax credits, which are expenses that are 100% avoidable. But there's more. In 2016, you could transfer an unlimited amount to spouses or charities, and no taxes would be due because those are deductible. You could also transfer $5.45 million to anyone else and still not owe estate taxes because that was the tax-free transfer threshold. But let's say you only transferred $2 million to people who are not your spouse, and you still had $3.45 million of that estate tax exclusion threshold left or unused. You can give that unused amount to your surviving spouse so that he or she can use it in the future for gifts or on his or her estate tax return. In fact, our current estate tax return provides 11 spaces for your 11 deceased spouses who gave you some of their unused exclusion, which is absolutely brazen. Who could handle marrying 11 different people? Come on now. But in 2016, there were a combined 3,733,143,000 of these unused deceased spousal exclusions claimed by 1,082 individuals, or 592,562 standard deduction equivalents. In the 40% tax bracket, this is equal to $1.49 billion in tax savings and reduced the average estate tax bill by $1.38 million. To put it another way, if this is the average American taking the average standard deduction of $6,300, this is 1,082 individuals taking 592,562 standard deduction equivalents for the deceased unused spousal exclusion. This exclusion started in 2010 under H.R. 4853, the Tax Relief Unemployment Insurance Reauthorizations and Job Creation Act of 2010. 139 Democrats and 138 Republicans in the House, and 43 Democrats and 37 Republicans in the Senate voted it into existence in 2010. I wish we had this type of bipartisan support to figure out a solution to national debt, but we don't. The last credit available to reduce your estate tax bill is the Unified Credit, which is that credit that lets you transfer $5.45 million to anyone during life as gifts or upon death as an inheritance with no taxes due. The credit saved 13,427 Americans $2.2 million in taxes each, or $30 billion in taxes total, which is equivalent to $75 billion in tax deductions and 11.9 million standard deduction equivalents, or 860 to 900 standard deductions per estate filer. Thus, we have shown how deductions, exclusions, and credits reduced 13,429 Americans who owned $197 billion in assets and had to file an estate tax return in 2016, down to 5,467 Americans who owed a final bill of $20,485,090,000 in taxes. Adding in gift taxes paid, our effective estate tax rate is 17.18%. This is less than 17.65% owed by the average American paying federal taxes of 10% in income tax, 6.2% in Social Security tax, and 1.45% in Medicare tax on the first taxable dollar after taking that $6,300 standard deduction. Side note, in 2021, the amount a person can now transfer with no estate tax is now $11.7 million and $23.4 million per couple with portability. May our children, their children, and their children, who will be paying our debts, also forgive our sins for pretending that this is moral or acceptable. In the next episode, I'll recommend changes to align our estate tax code with our federal spending and address our Congress' propensity to continue to complexify our tax code with an ever-expanding list of tax deductions. Until then, invest your time wisely.